I talk to a seller. They're okay with doing a carryback, aka Morby method, stack method. Um, the numbers work out. I go to Funds to Close website. I run my numbers on there. I generate my LOI for the real estate agent or the homeowner, whomever I'm sending that to. Now, I go to my DSCR lender. They're going to say, okay, based on your credit, we're going to do 65% down, and you have to come up with the other 35%. I now come to funds to close. Funds to close can then do the snapshot of that 35% for the DSCR lender, and then we basically move through the transaction and get it closed. Is that, did I summarize everything well?
Yeah, yeah. I think the only step in there, there's some paperwork that needs to be done, obviously. There would be, but you're right. Once that is a great broad overview. Thank you for that, Robert. That's really good. There's some finer points that go along the way. One of them is that when you first start yeah, so last week we went over some of the challenges and solutions to doing buying zero down. So this week the plan is to go over the rest of those that we have. And also, if you have deals, we can look at those and also answer questions. We just want to help you guys to understand this process. There's a lot of moving parts, so we know it takes a while to wrap your head around how this whole thing works, but we'll help you as best we can to move forward. We know we got some people who are close to submitting some deals. Benji's been working on a couple of different deals that he has. I think he'll be submitting one soon, and we have some other people that are also on the verge of starting the process of buying properties for zero down. So really exciting, and glad you guys are here to learn. Real quick, if this is your first time, you can put stuff in the chat. Like if you have questions, you can put things in the chat. So if this is your first time, put a 1 down in the chat there so we know, hey, this is your first time and you're like a brand newbie. That's fine. We appreciate that. Okay. Great, Colton. Thanks for coming out. I'm glad you're here to learn.
And also, if you're just not maybe new to real estate, but you're newer to learning the this acquisition, right? Of buying property zero down. Yeah, I can put a 1 in the chat there, just like Benji did. Thank you, Benji. I know a lot of us are still learning this acquisition strategy. So love that you're willing to jump in.
Yeah, good stuff. Good stuff. Well, hey, does anybody have any questions or deals up front here that they want us to take a look at or have questions about? Or any questions that you have right out of the gate? You can either unmute and ask your questions, or you could put it in the chat if you'd rather do that. Either way is good. If not, then Benji's got his hand up. Okay. Go ahead, Benji. What do you got?
Hey, so like we were talking about the when I asked the self-storage, right?
Right.
How? Yeah, go ahead. With the self-storage, the property is it because they have a business on the property and that's why we're not able to do the because it's a business running on top of the
I
property?
guess
Is that
the
one?
question is, are you going to get a loan for the property or you're getting a loan for the business? Are they going to
The
be right? So if you're getting a loan for the property and you can secure the loan for the property, then it probably doesn't matter that there's a business on there. Now, here's the tricky part with that. A DSCR lender is going to look at the property and say, what's the value of this property? And if it's just, like a storage unit, it's got something on there. You're talking about storage units, right?
Yeah, but what they're doing with this group is doing with this has like 75 units, but they're making all the units are like mechanics and they're like shops in it. Like people are running their business out of it, but it's not it's legal the way they're running it, but not legal in terms of the way it's supposed to be. I am assuming, because I don't know how they're running it um, as a business.
Yeah, and again, most cases, if it's the business that they're selling, then you would need to get a business loan, and those are difficult for buying zero down, as I mentioned, when you shot me the question,
Yeah.
because business loans do not allow, at least we haven't found one that allows a second position. And as you know, this
Right.
strategy requires a second position note from the seller.
Right.
So if you can get the kind of loan that works for that, then yeah, we can definitely fund the upfront money and help you with the process. That's what we're here for. I just know that other people have come to us with, hey, I want to buy this business. Can we buy that zero down? And we always run into the same thing. The business
Yeah, I don't
loans
want to run a
don't
business.
allow that. Yeah.
Trust me, I don't want a business. I don't want it as a business.
So yeah, that's
That's
something.
why I asked also, because it was, yeah.
I would say talk to lenders and say, hey, do you lend on this? And if you do, are you okay with second position? That's the key. If you can find that, then we can go with it, right?
Yeah.
So yeah, good question, Benji. Thanks for bringing that up.
Yeah.
Anybody else have something out there? Questions or anything? If not, I'm gonna jump in to my slideshow that I have here. So just give me a second to
Colton, did you
get
have a
that
question or
ready.
did you just unmute?
Oh yeah, sorry.
Okay.
So is this like specifically just for businesses, or can you do it with like rental properties as well, like
Actually,
single family?
it's more done with rental properties. Benji was bringing up kind of a fringe possible idea of a business, but we
Mm.
primarily fund when people are buying investment properties like
Oh,
single
that's good.
family,
Yeah, because
multifamily, co-living, any of those kind of, yeah, any kind of investment property that you can get. Typically, people get if you're going to buy and hold, a DSCR loan, right?
yeah,
Debt
because I'm
service. Yeah.
yeah, because I'm actually I'm doing co-living, so that's kind of like my strategy that I'm doing. So I've been finding a lot of like co-living deals. I'm in like the Dallas area.
Yeah. Perfect. Yeah, that's
So I'm
exactly
looking at
what
like
we're here
getting like
for.
DSCR loans. Yeah. Okay.
That's it.
That's
And
cool.
that's how that works. So in a nutshell, the reason we call it the stack method is because you get a DSCR loan and then you stack a note from the seller on top of that. And just rough numbers, like let's say you get 80% loan to value from the DSCR lender, you're not just going to get a seller carryback for 20%. You're going to get the down payment, which is 20%, plus the closing costs plus the fees. So maybe you're looking at getting 25 or 30% on the note. And so we got to make sure the seller has enough equity to cover that 30% and that they're willing to carry back 30%. As long as you have a new loan, a seller who's willing, and a seller who has enough equity to cover those things, we can make it work. So that's the strategy in a nutshell. And tonight I'm gonna go over a few of the challenges. Let me get this up first. Okay, present. If I go full screen, then I escape. I should be able to. Yeah. Okay. And then I will go here. All right. Let me see if I can share this. Okay. All right. I'm going to go for two here. Jump right into here. All right. Can you guys see that right now? Are you seeing? Somebody give me a verbal because I can't see you guys right now.
Yes.
Perfect. 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 All right. So stack method challenges and solutions. I'm going to jump through these first few slides pretty quick because we covered this last week. But one is bad underwriting. Make sure that you have your underwriting done by somebody who is familiar with that type of asset. So like you mentioned co-living, have somebody who's already got experience in co-living underwrite that with you so that you know it's going to be covered. Another one is making sure that you are clear with the seller, that they understand up front that what you're asking them to do is to carry back a portion of their equity on a note, and that they would be in second position behind the DSCR lender. We also mentioned that if the seller has an attorney, you've got some options there. You can explain to the attorney, you can or you can walk away, because the attorney is going to need to understand this in order to give their stamp of approval on it. Now we come to this week's challenges and solutions, and we are looking at, I wonder if there's a way out. Probably, can I go to, I'm going to try to go to full screen here if I can. There we go. So title company confusion. Common issues. A lot of times when people try to do seller carryback for the first time, they don't know how to explain it to the title company, or they try to put the seller carryback terms in the purchase and sale agreement. That is a big no-no. We do not want the purchase and sale agreement to say anything about the seller carryback. We need to keep these as two separate transactions. The first transaction is just a regular close using your DSCR loan or whatever kind of loan you have, and our funding that we provide through your LLC, and that just closes. Then there is the separate documentation that we have with the seller, that they agree to the terms of the note, and the seller gives the instructions to the title company to send a portion of their equity, not all to them, but a portion of it goes to our attorney. And that's how we keep that separate. So a lot of times they may ask, where is the down payment coming from? Or they say, I can't do that, it's fraud. Sometimes we need to explain this to title companies. There are lots of title companies that understand how to do these and they don't have a problem with it. But again, if you keep those transactions separate, then to them, it's just a regular close on the front end with just some instructions to tell them where to send part of the money over to the attorney. They do that all the time. They send money all different directions based on the instructions that the seller and the buyer give them. Really, title companies are really only there to follow the instructions they're given. Another thing is, you can work with vetted title companies, work with one of the title companies that we've already closed deals with and help them with that. They already understand this. They already know there's a normal close, and then there's a seller carryback note, or in some cases, a preferred equity. That's another strategy that you can use if the seller doesn't want to do a note. Sometimes you can work it out where they will sign onto your operating agreement and you can pay them equity on what you're making on the deal. That's just another way to do this. All right. Any questions about that and I don't know, I'm going to have to jump back here real quick to see if anybody's got their hand up or, okay, no questions so far. I'm going to keep going here. And this keeps popping up. All right, go back to the screen here. All right, so the next thing is the DSCR lenders. I would say of all the different deals we've seen, the number one thing that causes these buying zero down seller carryback deals to fall through is issues with the DSCR lender, or whatever kind of lender you're using. Could be a hard money lender. And the four challenges are appraisals, LTV, qualifying for the loan, or lender rules. And we're going to go through each of these so you can understand how these challenges can be overcome. So let's talk about appraisal and lender issues. We saw this with one of our deals recently where the appraisal comes back too low. It came back much lower than they expected. Let's say low appraisal, 375K at 80%, 300K, and then reduce offer from 500K to 400K. There's different ways you can come at this. If the appraisal comes in too low, you can go back to the seller and renegotiate a lower price. You can try to get a higher LTV. That might be difficult. You can get a second appraisal. Okay. Sometimes the first appraisal, you can get a second appraisal that comes out more favorably. That's possible. Doesn't always work, but that's a possibility. Or again, you can ask the lender to increase the LTV or just walk away. Appraisals can be deal breakers, and you really can't get that appraisal done until you're in the deal, unfortunately, but that does happen from time to time. So that's where that underwriting comes in again. If you do a great job with your underwriting, then you should be much closer on your appraisal. Okay, next, lender loan to value is too low. Let's say it's a 500K property and they say we can only give you 60%. So that's 300K. So that means the seller would have to carry back over 200K, and they might not have that much equity, or they might not be willing to carry back that much equity. So if that's the case, then one of the solutions would be to go to a different lender and get a higher LTV. You could also try to renegotiate. Like I said, you might be able to get your seller to increase the amount that they're carrying back, or again, walk away. Not all these deals out there are going to work for a lot of different reasons, and that's okay. It's a numbers game, just like anything else in real estate investing. And the last thing is qualifying for the DSCR loan. Here are some things that could cause problems. People don't think about this necessarily, but if your area is in a rural area, if you're outside of major cities, DSCR lenders are not real excited about funding those because it's harder to get rid of them. If something goes wrong, they own the property, they have to sell that. And a rural area may be hard for them to resell. So they would want something that would have good resale value, and that might be tough. Depending on the type of property you're getting, if you're getting a multi-use property, it might have, that's like where you have a business below, right? You have commerce below, and then you have housing above. Those kind of multi-use things might have special requirements. So the type of property that you're trying to get a loan on can have a factor on that. Borrower credit. I just talked to somebody today who was considering, hey, have you guys ever thought about being a credit partner? Been there, done that, don't want to do it again. And I kind of advised them, look, here's the thing. Yes, some people need to get credit sponsors, but and people have bad credit for different reasons. Okay, there are legitimate reasons why maybe you went through some kind of a relationship thing and you ended up with bad credit. It wasn't your fault, right? We get that. That would be somebody maybe you could work with. But again, in a lot of cases, people have bad credit because they made mistakes in their financials in the past. Do you want to work with somebody like that? But if the issue is getting the credit, you can find people who will JV with you, partner with you, that can be a credit sponsor for you, and get it done. Another thing is experience. We see this all the time. Brand new people who have never even bought one piece of real estate want to start with a multi-million-dollar multifamily. And it's like, that's great. I love that you're shooting high, but you probably aren't going to qualify for this loan because the lender's going to say, how much experience do you have in real estate? How many properties have you bought? How many multifamilies have you bought? What's the largest property you ever purchased? And you're going to say, I haven't done anything. And they're going to say, well, then we're not going to risk all of our millions of dollars on you who's done nothing and has no experience. In that case, what we always encourage is find someone who has the experience, JV with them, partner with them, and get the experience by working with someone who has experience. The other thing is this: you've all played Monopoly, right? You don't get to put the red hotel on your property before you have 4 green houses. Maybe start small, get some experience, and then you can go for the bigger deals later on. All right. Any questions about that? I'd love to hear some feedback or questions. Anybody have anything that they want to talk about so far? Okay, that's all right. You can save those questions for the end here. We got plenty of time. Let me jump back in here. Next is DSCR requirements and red flags. So crucial consideration. You will likely need to talk to 10 or more brokers to find the right lender. And here's the thing: when we refer you to we don't refer you to a lender, we refer you to a broker. Why? Because each broker probably has 5 to 10 lenders that they work with. So if you go to 10 different brokers, you're talking to 50 to 100 different lenders. There's more chance you're going to find what you need. Okay. So the key here is they're always going to want some kind of down payment, right? Nobody's going to fund 100% of your real estate investment. It can't be third-party funds. If they say, it can't be third-party funds, they want the borrower to have skin in the game. All right. So how do we overcome that? Sourcing. All right. We'll talk about that in a minute. Sourcing is how we overcome that objection. Another thing that some people say is, well, we can do a gift letter. I am the buyer's brother and I'm gifting them 100K. Folks, if you are lying about who you are to use a gift letter, that's fraud. So we don't do that. You can't do that. The funder signs onto the operating agreement. This is not necessarily fraud because it can happen, but we don't do that. We will not sign on to your operating agreement. There's just too much liability there. There's too much risk for us to be able to do that. So that's not something we're going to be able to do. So how do we do this? Well, we have a system in place where we take care of the sourcing by creating a relay bank account in the borrower's LLC. And in some cases, even in the holding LLC, depending on the lender, sometimes they want to see two levels. They want to see the money coming from a holding LLC into the purchasing LLC, both owned by you. Why would they want that extra step? The reason why is because a lot of times these lenders are not going to service the loan themselves. They're going to sell that loan to somebody else who's actually going to service the loan. You've seen this. You've got a loan on your house. Next thing you know, Sally Mae is processing your loan. What happened to the lender I had? They sold the loan to somebody else to let them process it. Okay. And in order to tie it up neatly with a bow so that somebody else will be able to buy it from them, they need to have a clear path that says this money came from the borrower. So what we do is we've had in some cases where we had created a relay bank account in the holding LLC, created a relay bank account in the borrowing LLC, moved the money into the holding LLC, then into the borrower's LLC, and then into escrow to purchase the property. And that way it makes that lender super happy that they can resell that loan. All right, the next thing is seasoning. Some lenders will say, hey, I need seasoning. Well, the question to ask is, what are you looking for? Okay, if you need a snapshot proof of funds, we do that all the time. We put the funds into that relay bank account that's underneath your LLC. We take a snapshot of that, or we can even print out a statement, a monthly statement for you. And that way they can see that you have the money ready to close. They just don't want to bring their money to escrow and then have you go, oh, I don't have the money. And then you can't close. That's a waste of their time and energy. And it costs them money to move that money. So they want to know, okay, the funds are going to be there. That's why they want that. If they need bank statements over time, we need to see bank statements for the last 6 months to prove that you have the money in your account. If that's the case, we're going to find a new lender because we don't do that. We can't do seasoning over a long period of time. We can do a snapshot. And I found out that we can even do back-to-back monthly statements if we do it right at the turn of midnight between the last day of 1 month and the first day of the next month. We can actually print out 2 monthly statements with one in and out, and that would sometimes satisfy the lender. Okay. So if it doesn't fit their requirements, in most cases, we're going to find another lender, and that's why you're talking to a bunch of different lenders. Hopefully that makes sense. So they're going to say, where's the money coming from? You have a down payment, great. Where's it coming from, and how long has it been there? Again, a snapshot we can do, bank statements over time we cannot do. Okay. So here's the key takeaways for this from everything we covered last week and this week. If you don't qualify for the loan, maybe you shouldn't be doing the deal. That's just trying to be honest here. And also, if it was easy, everyone would do it. The real work in these is getting the loan. You can see there's a lot of requirements. There's a lot of hoops to jump through. And so that is why we say if it was easy, everyone would do it. Who doesn't want to buy a property for zero down and put money in their pocket, right? Everybody would love to do that. But it is hard work. Ask anybody who's actually done this. It takes a while. And that's why we also encourage our borrowers to tell the seller, hey, this isn't going to be a 2-week quick cash close. This is going to be, 6 weeks to 8 weeks, because I have to secure my financing. We have to make sure everything's got aligned so that we can do this strategy. But the good news is you're going to get your asking price, and you're going to get the terms on the note that we agree upon. So, all right, that's enough of me. Anybody out there, questions, ideas, thoughts? What do you got? Oh, thanks, Annie.
Yeah, she took off. I was going to say too, the other thing is I think in transactional funding is short-term funding, right? And so that is why we don't season for long periods of time, right? Because our money goes in and out all the time, constantly. We're pulling it from literally one LLC or one Relay bank account to another LLC and then back out again, right? Within just a very short amount of time. So with that being said, if someone's looking like Elizabeth, she's one of our private money lenders on here. So if you're looking for private money, reach out to her. Okay. She'll help you with that. But the point is like private money, as you know, is long-term, right? That you're looking for maybe to borrow, $450K for 3 to 6 months or whatever it may be, right? That's long-term funding. So understanding that working with our team, you are looking at transactional funds, and transactional funds literally mean what they say. They are used during the transaction only. And so from the time a property goes under contract until it closes, that's it. That's our time frame. Okay, once close of escrow comes, we're out. So I hope that brings some clarity for those of you who are newer. Like, why don't they season longer? Right? It's just because of the type of funding that we do. I see Robert shaking his head like, aha, light bulb moment. So that's good. That's what I want to see on here, is I want to know that that makes sense to you. Anyway, so any other questions? He presented a lot of information on those slides. There's a lot to unpack really on each one. And maybe that's something that we can do down the road, is kind of really unpack each part of it, because understanding this type of funding and the need for this type of funding, it is complex. There's a lot of layers to it. So yeah, that's all I wanted to say.
That's great. Thank you, Marcella. And I was going to add, hey, look, we understand you're not going to learn everything you need or get all your questions answered on this Zoom. So we are available. You can go to our Calendly link. If you scan the QR code there with your phone, or just go to our website, fundstoclose.net, and you can click on the link, book an appointment with us. We're available for individual Zooms, so we can talk through your questions and help you understand this better. Or if you have a deal that you want us to go over, we have people sometimes that'll jump on a Zoom with us to look at some numbers, go over a deal, see if it pencils out, see if it makes sense. You're also allowed to bring your deals here. I also want to add that because you're on here, you're going to get a replay, and then I always send out an email for the next week's that has the link for the replay as well. And so you can go back and watch that. I have also recently started adding our previous Zooms onto our YouTube channel. So you can check us out there as well. We are Funds to Close 2 on YouTube. And you'll see that we're putting up the older replays of these Zooms. So you can go back and learn by watching some of those as well. But yeah, we're here to help you guys understand this process and answer questions. And Marcella put the link for the Calendly in there, so you can book an appointment with her. Either one of us, either way, it will work. You can book a link.
And Colton did have his, I guess his mic unmuted, and then I
Yeah.
think we kind of missed that. Sorry, Paul. Go
No,
ahead.
no, oh, no
What's your
worries.
question?
Yeah, so I guess are these deals only applicable to like seller financing in terms of like where they're going to do the seller carryback? Is that really what?
Right. Yeah, no, exactly. So basically, the way that this works, the way that you can purchase a property for zero down is if the seller has equity and they're willing to take a portion of that equity on a note on terms over time. So it's
Okay.
basically it's a seller carryback type of deal, but there's also a loan
Yeah.
involved.
Involved. Yeah, that makes
Because
sense.
sometimes people do seller carryback deals where the seller carries back 100%, and they just do a note, and there's no need for a lender at all. They just pay the seller back on the terms of the note 100%. That's great. If you can get one of those, that's great. And if the terms work out for you, fantastic. But the key with this is if the seller needs a portion of their equity, okay, if
Mhm.
they want some of that money now and they're not willing to take all of it over time, then you kind of negotiate, okay, how much do you need now? Right? Okay, great. If I could get you that 100K right now, would you be willing to carry back the other 200K
So is
that you
it
have
kind?
in equity?
Yeah, is it kind of like a Morby method in a way? Because I
It
know
it is exactly that.
oh, okay.
Yeah, Morby method is the same thing as seller carryback is the same thing as stack method. They all just different names for the exact same thing. That's right, Colton. It's a
Okay.
Morby method.
Yeah,
Yeah.
because I was like, that sounds so familiar, but yeah, so okay.
Yes, yes,
Yeah.
Morby method. That's it. Exactly. It's exactly what this is.
Okay.
Yeah.
Okay, that makes sense. Yeah. Because like just for some context on kind of the deals that I'm doing right now, they're not with seller carrybacks, but they're more of just like cash deals. I know that wouldn't be really applicable to what we're doing right now, but
Yeah, I mean, because cash deals, you're going to have to either come up with the money yourself or you're going to have
Mhm.
to get a private money lender and pay them whatever they want.
Yeah.
Um, the benefit of doing it this way as opposed to just doing a cash deal is number one, you can negotiate the terms. You're going to get a loan, which you can pay back over time. You're going to get whatever the terms you can negotiate on the note. And sometimes you can get really good terms on the note. We've
Yeah.
had borrowers that have been like, no payments for 6 months until you stabilize the property, zero interest, principal only, 5-year balloon, that kind of stuff just makes it work for some investors. The
Mhm.
other thing that you can have is it's a way to put some money in your pocket. Let's say you have some minor repairs you need to get done, but you just don't have any money. Now you could raise private capital for that. You could, um, or you could use part of that DSCR loan and the seller carryback, put that money in your pocket and have it right away. Different strategies for different purchases, right? So
Yeah.
whatever works. If it's working for you to do it the way you're doing it, great. We're just trying to introduce a different strategy that we can help with if people are interested in trying to do it this way.
Oh, for sure. Yeah. Well, I'm still working on getting my first deal acquired, so I'm
Okay.
just kind of learning about
Yeah.
all the kind of different methods that there are. But
That's great. We're glad you came out. We also have we
Yeah.
can send you Colton credibility package. Marcella is great about that. She can send you our email, and it has a couple of videos in there that also give a little more explanation and explain how our funding process works. So
yeah, that'd be great.
um, yeah, we can send that your
Perfect.
way.
I'll reach out to you, Colton. We'll connect there. That sounds
Okay.
great.
Thank you so much. I
Ben,
appreciate
I
it.
think, yeah, you're welcome. Robert, I think he had a question.
Yeah, I just had a quick question. So just to kind of summarize everything, because I guess sometimes it takes a while to fully understand the process. In terms of the flow, providing no road bumps or speed bumps. So I talked to a seller. They're okay with doing a carryback, aka Morby method, stack method. Um, the numbers work out. I go to Funds to Close website. I run my numbers on there. I generate my LOI for the real estate agent or the homeowner, whomever I'm sending that to. Now I go to my DSCR lender. They're going to say, okay, based on your credit, we're going to do 65% down, and you have to come up with the other 35%. I now come to funds to close. Funds to close can then do the snapshot of that 35% for the DSCR lender. And then we basically move through the transaction and get it closed. Did I summarize everything well?
Yeah, yeah. I think the only step in there, there's some paperwork that needs to be done, obviously. There would be, but you're right. Once that is a great broad overview. Thank you for that, Robert. That's really good. There's some finer points that go along the way. One of them is that when you first start the process, you're going to set up a relay bank account in your LLC's name that then you're going to give us control of. And that's how we move the money in and out, right? So that's an early step, is setting up that
Makes
relay
sense.
bank account. And then also when you first request the funding, you're going to submit, like you said, you can go to our website, you can put the numbers in, you can print out the LOI, you can send that and get it signed, have that returned to you. That's what you're going to submit. A lot of people want to submit a purchase and sale agreement. And the problem with that is, like I said before, they're going to want to put that language of the seller carryback in there, and that's just a no-go. That's going to mess everybody up. So we're better off starting out with an LOI that you can generate on our website. That signed LOI will get the ball rolling. You can submit that request. Our team will look at that. They'll get back to you with an email within 30 minutes, and then they'll ask you to schedule a phone call. One of our transaction coordinators will jump on a call with you. They'll talk through the deal, make sure everything sounds good, make sure you understand the next steps. And then if it's a go, they're going to say, okay, here's the next step. Sign this paperwork. There is, for the TCs, not for us, but for those transaction coordinators, it's more than just transaction coordination. They are our compliance team. They're going to make sure that you're doing this right, and so that you don't run into a lawsuit down the road, right, for doing something wrong. So that compliance is worth its weight in gold. So they charge $1,400 up front, and then the total is $2,500. They charge the other $1,100 on the back end. But that $1,400 up front is non-refundable, because once those TCs start to go to work, they're doing the work whether the deal closes or not. So that's the non-refundable part up front. But that's a small price to pay. And like I said, at the end, you're probably going to put money in your pocket. So it's going to be a wash anyway. It's just that upfront investment. Once that is done, then they're going to have you set up that relay bank account. They're going to have you confirm the details. You know, that the first LOI isn't always the final product. You know, you might have to go back and renegotiate the amounts, the interest rates, and all the terms of that. Once we've got all that, then the attorney can go ahead, draft that note, get it ready to go. Obviously, trying to get the loan approved is a big part of the process, as we talked about. Once you've got that loan approved, they might want that snapshot. We're already ready for that, because that's why we have the relay bank account up happen very early in the process, because we want to get that snapshot as soon as the DSCR asks for that. We can provide that. And then once they've approved everything, the DSCR lender gets the clear to close. They always fund first. They're going to fund escrow first. Then as soon as we have confirmation that DSCR funding is in escrow, we'll move the money into your relay account in your LLC. We'll move it from there into escrow. If the paperwork should already be signed at that point, we close the first one. The title company follows the instructions of the seller and sends that money over to the attorney, right? The attorney records the note and sends it over to the seller. The seller gets their portion of the money at the first close. We get our money back and our fee from the attorney, and any extra money, well, the attorney gets his fee out of that second close, and then sends you the rest of the money, goes directly to you as the buyer. So that's kind of the broader, the more detailed. But yes, you nailed it. That's the process. So thank you for
Man,
bringing
that's
that up.
exciting.
Yeah, it really is. It really is. When all the pieces come together, it's super exciting, because then, you're like, okay, I actually bought a piece of real estate and I didn't have to put any money. I actually put money in my pocket. Like, that's crazy. Now, you have to make sure your underwriting is there so you can pay back both of those, right? You got to be able to pay back the loan and the note. But if your underwriting's good and everything goes well, then yeah, good to go. All right. Thank you.
Yeah, great job, Robert. I was just going to share too with Colton or anybody else. I think Ahmad is new. We've seen you register for the Zoom, so we're glad you made it in.
Hi, yes.
Oh, you unmuted. Hi, Ahmad. How are
Hi.
you?
Yeah, I'm good. I'm good. Thanks. Yeah. So yeah, I joined it. Elizabeth, I think we just connect this morning. So
Oh,
yeah,
great.
I think she like give me your details. So yeah. So I was also looking at. I'm a new in a Pace Morby sub two community. So
Yes.
so I'm just looking at deal like RV park, mobile homes, or multifamily apartment complexes. So I was just confused, okay, that's fine. Mostly I'm looking the seller finance, so more like two deals I found like 70-30 seller is saying. So 30% like it's around coming out like 1 million around 30%. So I was looking like should I go like with a private money lender for that 30% or how this work or you guys also give a loan?
Yeah, good question. So we do not do private money lending. So
No.
in
Okay.
that scenario, you would have to decide, hey, am I going to get PML to cover this 30% and then
Mhm.
pay them whatever they're going to require? Or am I going to get a DSCR loan for the
Yeah.
70% and ask the seller to carry back, say, 35%, right?
Oh,
Or 40%.
right.
So you have to make sure you have enough to cover not just the down payment, not just
Right.
the 30%, but
Okay.
also the closing costs and the fees. So
Okay.
that's why it's the
That you
usually,
guys covered 30%.
yeah,
That
we
closing
cover.
cost.
So basically what we would do is we would fund
Mhm.
the upfront money, whatever is on the HUD for the
Mhm.
first closing that is not covered by the DSCR, we would cover. So
Okay.
if the DSCR is 70%,
Mhm.
but the down payment is 30, the closing
Mhm.
costs are 5,
Mhm.
and our fee is very small. So what we would need is 36%.
Okay.
Okay. 36% of the purchase price is what we would fund, right?
Mhm. Mhm.
So the seller is going to carry back 40%.
Right.
Instead of carrying back 30%, they would carry back 40%. And
Okay.
that way there's a little room in there. It covers our 30% down, it covers the closing costs, it covers our fee, and it puts a little money in your
Right.
pocket.
Oh.
So at that point, because you needed 30 and you
Mhm.
borrowed 40 from the seller, right?
Right.
You're going to end up with you're at 110%
Right.
of the
Mhm.
purchase price that you owe. But you also, bought the property for zero down and put some money in your pocket.
Right.
So that's how this strategy works. So there's two separate strategies. Getting a
Mhm.
private money lender is one strategy.
Mhm.
Getting the seller to be willing to carry back a portion of their equity and allowing us to fund the upfront money, and then we get that right back, like Marcella said, at close.
Right.
And then the note is what replaces the
Oh,
money that we
you
took
guys.
out.
Okay.
Yeah.
Okay, sounds good.
Yeah.
Yeah. Yeah, because
Yeah.
I'm just figuring out, all this. It's all puzzle. What
Oh
I
yeah.
need
There's
first, find the deal first, or communicate with the seller first, or first straight up the finances, of all the funds and everything. So yeah, I'm in this stage right now. So.
yeah. Everything always starts with a seller who's got a property that they're willing to sell. Everything always starts with that. And
Uh-huh.
Pace says that all the time. It's like
Right.
step one, find a seller who's motivated to sell. That's it.
Right.
You
That's
got to
right.
start with that and then figure out what strategy is going to work for this. We're
Right.
not here to try to push our strategy on anybody. We want you to use whatever strategy is best for you.
Right.
If getting a private money lender works better for that particular deal for you, we're going to say, great.
Mhm.
We don't do that, but we can give you a couple friends that we have, like
Right.
Elizabeth here,
Uh-huh.
who have private money lending connections. They can help you find the money.
Oh, okay.
If using the buying zero down strategy is
Uh-huh.
better for that deal, then we'll help you get it done, right?
Okay.
As long as the numbers work out.
Yeah.
So again, we want to be a resource to help you close
Mhm.
deals. If it works this way, great. If it doesn't, then do what works best for you.
Okay.
We're here to help educate and help people close deals, but we're not trying to
Mhm.
tell people how to do it. You've got to decide what strategy is
Right.
best for
No,
you.
because then I've tried to find some DSCR loan, but I think few I could connect a few people but they're saying they not do RV park and mobile home. They do solid asset like apartment complexes, those, so.
Yep, that comes kind of full circle back to what Benji said at the very beginning of this Zoom. He was asking about a storage unit facility, and is that something that we could do?
Uh-huh.
And again, it comes down to getting the loan.
Right.
When it's a business type of loan, they won't allow a second position, so it
Mhm.
just kind of it kills this method.
Right.
But like you said, if it's a multifamily, if it's a single family home, if it's
Mhm.
some kind of a real estate asset, DSCR lenders do those all day long.
Oh.
And there are plenty of DSCR lenders who are fine with our system,
Mhm.
and having a second position note doesn't bother them. And
Mhm.
that's who we work with. So
Oh.
yeah, I wish we could do all these other things, but it's just, it comes down to getting the loan is what
No.
it comes down to.
Right.
Can you get a loan?
Okay.
And will that loan allow a
Mhm.
second position? And
Okay.
and some assets you can't do that.
Oh,
So
can you do that? Yeah, and
yeah.
and you have a list for those DS people who offer the loan,
Great question. Great question. We have a couple of people that we refer people to initially who can start to look at the DSCR. We have like 2 or 3 DSCR lenders that we can refer you to. But once you sign up for our services, if the numbers work out and you do decide to go with this process, our TC team will give you a list of about 10 other DSCR lenders, and then you can really, work through the list. And like I said, that's the grind. There's always a grind, right? Well, the grind in this strategy is finding the right lender for your deal so that everything meshes and it works. And you may have to talk to more than one broker, who may have to talk to multiple lenders before you find the right lender for your deal.
Correct. Okay, sounds good. Thanks.
Yeah.
Yeah.
Great. Thanks.
And,
Thanks for
coming in. And Ahmad, yeah, happy to send you our credibility email package as well.
Okay, sure.
To the email that you registered for this Zoom on. I can definitely
Okay.
send that over to you. So you'll have it, and then you'll see, our fund box is in there, how we fund, how much we fund.
Okay.
We do double closes as well. We also do earnest money. But yeah, buying zero down. I know you're part of Sub2. I am too. We're both Sub2 and Gator. Tim and I both are Sub2 and Gators. And so we've been doing this a couple years now. And we know what it's like to be new. And I'll be honest, like, it's kind of like, you're like, I don't know, what am I doing first? Well, what's next? And you just, and you're trying to figure all of that out. And that's perfectly normal. We're here, like Tim said, to help those that need Morby funds or need, because Pace calls it Morby, right? The Morby method. We call it buying zero down or the stack method. It's the same exact funding. But, we also provide funding for double closes, and we work with buyers a lot that are buying properties, double closing, or the wholesaler. So that's assigning it, right? And he brings a buyer, and so brings that buyer in, and then we also provide EMD. So we've got a lot of unlimited capital. I mean, EMD, we can fund up to 100,000, double closes up to 100 million. And so we have access to capital, right? And for the Morbies as well, we go up to 101 person, or sorry, I'm blanking out. we go up to
1 million
1 million,
on
and then it keeps going. It's kind of crazy. Yeah. So that all being said, it's, unlimited access to capital, but it's more of looking at your acquisition strategy. So like, let's just say you being new, I would say, like, when I was new, I had no clue what I was doing. So honestly, and that's okay. And so I think it's when you're learning. How long have you been in Sub2, Ahmad? Or how long have you been
like 2 weeks, so you can say.
Oh my gosh, you're drinking from the fire hose. That's what you're doing. You're drinking from that fire hose that Caroline Kane always talks about. Are you drinking from the fire hose? Anyway, so
because
I totally
I was very excited, so I started looking deals also, the site, same time.
Yeah.
I learned a lot, from Pacemore, because I'm listening his YouTube a lot. Like, I'm listening to him a lot. So I learned a lot of things. So, but I also have proper. Currently, I also own like 2 duplexes and one single family home.
Oh,
Yeah.
oh,
So
congrats.
yeah,
That's huge.
it's in my what do you call 2 duplexes I have in my IRA, Roth IRA,
Yes. Okay.
and one single family I purchase on cash. So mostly, I do on cash kind of basis. I
Right.
use my own money. I don't use I don't take
Okay.
loan. I'm scared of it earlier.
Oh, okay.
So I don't
Okay.
want to just
Okay.
screw up my credit or those things, if not pay off. So I mostly
Right.
what I earn, I purchase it, things. So but the
Okay.
thing is now since I listen Pace more be in saying 0% down and you can get a
Right.
big businesses, so why not? Let's
Right.
try this, because I
Sure.
have a 2 duplexes and one single
Okay.
family. My life is still
Right.
not changed. Almost 5 years,
Mm,
I'm stuck with these three,
mm, okay.
property. So
Right.
I need to grow more now because I'm in the IT field. But since
Oh,
the AI coming, very soon maybe I don't have a job,
oh, you
because
know what?
AI.
We all feel that. We all
Yeah,
feel that for
because
sure.
all the work we do, AI can do in a few like minutes.
Yeah. Oh,
Yeah,
yeah.
Yeah.
No, that's
Well,
true.
yeah, Ahmad, it's great that you had some experience already, right?
Mhm.
And
right.
that's wonderful that you already came in with that. So
Right.
now it's just, take your experience now, add these different strategies to it and figure out what works for you. And
Right.
yeah, if you want to scale,
Uh-huh.
using your own money is going to limit you, right? That's where
That's what
the
happened.
buying zero down or, getting sub two deals, things like that are going to allow you to scale faster. Using these creative strategies is going to allow you to scale faster. So we're glad you're here and
Right.
open to learning, even though you've already got some great experience there.
Mhm.
Hey, I wanted to go back to what Robert had shared earlier and just do a quick share because he had mentioned our website and how you can get an LOI. So just real quick, I wanted to show you guys that.
And perfect. And then we'll go back to Colton because I saw he unmuted as well. So I saw that, Colton. I'm watching with one
Okay.
eye. I'm watching with one eye.
Okay. So if you go to our website, which is funds2close.net, right, you'll see this. And then if you click on apply for transactional funding, it'll take you right to our funding web page, which is fund.funds2close.net. And you can see on here, we have a live deal activity board. These are requests for funding that our team has gotten just today. Stack method 400K, stack method 987K, stack method 1.047 million. EMD, there's some double closes in here. There's some double closes right there. One's for 85,000, others for 1.2 million. So we get all kinds of requests for transactional funding every day. What Robert was talking about is our deal calculator. If you click on this right here, you can put in the details, purchase price, the estimated DSCR loan to value, seller carry amount. Let's just load the example, okay? 500K purchase price, 75% LTV. The seller carry amount is 200. The seller equity is 300K. Estimated closing cost, transaction fee, coordination fee, agent fees. Here's the DSCR loan amount you would need. Here's the down payment you would need. Here's the seller carry amount. Notice the seller carry amount is higher than the down payment needed because you want to cover those closing costs right here and the transaction coordination and the funding fee. In this scenario, you would put a little over 50,000 in your pocket. Once you've got all your numbers in, you can click on generate LOI, put in just a few more details right here, the address, the buyer and the seller's names, the seller carry rate that you're starting off with, amortization balloon. You do those simple things, then you hit generate and it creates an LOI for you. It's really very easy to use. We also went over last week the cash flow analysis. There's a way to kind of look and say, okay, am I going to make money on this? Some people are okay with negative cash flow because it means that they're still going to get appreciation. They're going to get tax write-offs. They're okay with that. But you can work the numbers so it works for you. And then once you have that, let me go back here. Once you have the LOI, what you can do is this is the amount you're going to request. Transactional funding needed. Everybody, well, not everybody. A lot of people mess this up. They either put in the purchase price or they put in the seller carry amount. what you need to put in when it says how much do you need, when you submit your deal, you're going to upload the signed LOI signed by both you and the seller. And then you're going to submit your deal and you're going to put this transactional funding needed amount right here. So you don't have to figure it out. It's right there for you. You can put that, this is how much we need to borrow, and submit that request for funding. And it's just that easy. All the tools are right here to help you to be able to figure that out and request that funding. So there you go. All right, back to Colton. Did you have a question or a comment, sir?
Oh yeah, just a quick one. Yeah. In
Yeah.
terms of like the relay, is it so like do you need to create like two? So like if you already have like a relay account in an LLC, do you have to create like a separate one that you guys can use? Okay.
Great question. Yeah, we would have you create a separate one under the purchasing LLC. And the reason why is because you're going to request a certain wire limit. So whatever you've been using, because we use Relay as well for our banking, that's what we
Mhm.
use. Whatever you have probably doesn't have those wire limits, but because we have a partnership with Relay Bank, because we do these deals all the time, we can have you set it up and we'll have you get the wire limits extended so that we can cover the full amount that needs to be sent over. So
Okay.
that's why we have you set up a separate one. Also, you're going to give us control of that account. I don't think you want to give us control over all the money in your Relay account, right?
Yeah. Uh-huh.
So by doing it as a separate Relay account, that allows you to give us control over that.
Mhm.
It's under your LLC, but we have control.
Yeah.
And then once we're done transferring the money in and out and doing the whole transaction, we can then give the control back to you. You can keep that as a separate account if you want to use it, or you can just get rid of the account. It doesn't really matter at that point.
Okay. Well, like if we were gonna like I guess do deals like more than one in the future, like you could just keep that account
Oh,
and
yeah.
just use that for the
yeah.
future.
I love that. Yeah. If you're going to buy more than one property in the same LLC, now you got to be careful. You don't want to put too many properties in the same
Yeah.
LLC, or else it kind of gets rid of that whole liability limiting factor. But yeah, let's say you wanted to buy 3 properties using 0 down and you're going to put them all in that same purchasing LLC. As long as the wire limits work, there's no reason why we probably couldn't just reuse that account again and
Okay.
again. That'd be
Cool.
great. I
Yeah.
love that idea, actually. That's great.
Yeah. But it probably like
Yeah.
streamlines it a little bit more. But
Yeah. All right. Thanks, Colton. Good question. All right. Any
Oh,
other?
can I?
Yeah. Go
Yeah, I
ahead.
was just going to share one more thing really quickly because I know we're kind of trying to wrap up. But yeah, any other questions, bring them. But I was just going to remind all of you that are on here that are new, we do pay for referrals. And so I know all of us know someone who is buying properties with the Morby method. So if you know someone and you are like, hey, because this is kind of how this, even just I had this conversation just today with another borrower that I'm calling tomorrow. She's in Miami, Florida, and she's looking for multiple lenders to help her work certain deals, right? So she's not just working with one, right? And so had she ever been referred to me, one of you guys would be getting paid if we closed with her, right? And we just paid one of our borrowers more than it was close to $1,000 for referring someone to us, for a double close. So it doesn't just have to be a Morby. If you know somebody who's double closing, and yes, Elizabeth does work with us, and we love that she partners with us. That's why she's here. She helps us with the PML, and she brings us leads, and she brings us referral partners. And so my point is, if you know somebody and you're just looking like, hey, if I just refer somebody, like I can get paid like a couple $100. I mean, like I said, this was close to $1,000 for just a name and a number. That's all he did. And I took it from there. So just keep in mind, that's some good pocket change, right? I mean, we could all use that right now for different reasons. So, but yeah, or invite him in. Like, I know Elizabeth does that as well. So anyway, any other questions before we go?
All right, guys. Well, hey, thank you so much for being here. Next week on our Buying Zero Downs, and we do this every Wednesday, 4:30 Pacific. Next week, Marcella is going to be sharing some strategies, some dialogues, some approaches. How do you start this conversation with a seller? What do you say? She's got a ton of experience as a wholesaler. She has talked direct to agent, direct to seller. She's even done door knocking. She has lots of experience in talking to sellers, talking to agents that represent sellers. And so she's going to share some of her knowledge with you guys next week. Don't miss our Buying Zero Down Zoom next week, and learn how to start this conversation with sellers in terms of, hey, how do you even start that conversation? Anyway, so that's what we're going to do next week. Marcella is going to be sharing some of her experience and wisdom. And so we hope you guys can come back, invite a friend. And we just want to say thanks again for coming out to our Zoom. And
Yeah.
like I said, you'll get a replay. Reach out to us if you have any questions. We're here available to help.
And I just want to say it's absolutely not my credit that I learned all that. I learned that from being on Caroline Kane's team in Arizona. I actually was on her team as a wholesaler. And let me tell you, if you're on her team, you're meeting with her at least once or twice a day on a private Zoom. And she is cracking down those conversations with the sellers, as you all know. You all know who she is. You all know what she does. So yeah, I learned from the best. And I also learned from, yeah, she is awesome. I also learned from Jeff Smith. I took a lot of training from Jeff Smith. So if you don't know who he is, check him out. He does a ton of training on how to have conversations with sellers. He's also in Sud 2. You can find him there on School. He does have a free school community. So check that out as well. That's where I've learned it from. I take no credit. I'm just passing it on. So looking forward to talking with you guys next week. Have a great rest of your day. Let us know how we can help.
Thanks so much, guys. Appreciate it.
Of
You're
course.
welcome. Thanks for being here. Bye, guys.
Thank
Good
you.
night.
All
Bye.
right.
Nice to
Thanks
meet
a
you.
lot.
Bye,
Goodbye.
Ahmad. Bye,
Bye.
Colton.
Bye.